Okay, today's class is on first-time investors. We will do a quick class today because we do have the recruiting event coming up. All right, before we start, there's two terms I came across this week. One of our very experienced agents came across it, and it's a term that it's not that prevalent. So let's see, have any of you guys ever heard of a rolling guarantee in a lease? What is it?
Heard of it, but I don't know what it is.
Rolling.
Okay, so when you have a new business, they don't have the track record and the financials to be able to qualify just based on the LLC or the corporation. So most or a lot of landlords will want a personal guarantee, which means that if you default, they're going to go after your personal assets and your personal credit, not just the business. Because it's very easy to dissolve or bankrupt an LLC, but then you got millions of dollars over here in personal because they have to go after one or the other unless you sign a personal guarantee, and then they can go after both. To make it a little more palatable, because a lot of course business owners don't want that to do a personal guarantee, because that's one of the main purposes of having a corporation is you protect your personal assets. So there is something called a rolling guarantee, where basically you guarantee, but it rolls. And so after like 6 months, it might go down to only 50%, and eventually it goes away. So it's a guarantee that you have to do, but eventually it will lessen or go away throughout the term of the lease. So that's something that's not that prevalent, so it's good for you guys to hear that. Another one, have you guys ever heard of ARV? As one of the, GRM, there's so many different, but have you ever heard of ARB?
I've seen it, but yeah, I didn't know what it
with
meant.
properties, okay. There's different ways that people say it, but the ARV is starting to be very prevalent, and it's the after repair value. Like when you're doing a rehab or remodel, whatever, it's like the mortgage companies, the investors are now wanting to know what's the ARV, the after repair value. We kind of just used to say the new market rent or new market value, but ARV is starting to become a thing, so you guys should know that. All right. You guys will have these handouts on tips for first-time commercial investors and what type of properties first-time investors should buy, but the simple thing is you can always go through and go who, what, when, where, why on these. The who is, who do you think first-time investors are?
Potentially like private investors, like doctors and people who have their own business and want to invest.
Exactly. First-time investors are people with some money, but not a lot of experience with this, but they have to have some money. Either they inherited or most likely they have a good job. So they are doctors, lawyers, business owners that they own a house, they own stocks, they just want to diversify because everyone knows real estate is one of the best things to invest in. So that's what first-time investors are. First-time investors are also called private investors because this is not what they do for a living, okay? This is something that they're just getting into. Now, private investors can later become professional investors once they have 10 buildings and they're making more of their money off this than they ever did when they used to be a doctor or lawyer. But most of them are still going to keep doing whatever they're doing, but sometimes they kind of integrate the two. Like, they're not going to go out and hire a CPA for their properties if they are a CPA, or they're not going to sometimes they'll get a real estate attorney if that's not what they do, but a lot of times, whatever their job is, they're going to try to integrate it with that. Even doctors, sometimes they will want to buy a medical building to have their office, but then they also are the landlord over their other tenants. Okay? What? Okay, so That's the next thing is, what should they buy? What type of property? What would be some of the things that would determine what type of property they're gonna buy?
To experience level, how much capital they have, how much loan they can do.
They're looking to use part of it.
Yeah, if they're looking to be maybe a future occupant of the building as well.
Is there, yeah, okay. Those are all good, but let's see. All right, so it's important first to understand the market being considered and the type of product, industrial, retail, commercial, for investment. Investing in a commercial property usually means becoming a landlord. There are absolute triple net investments through which investments are wholly responsible for the upkeep, but with most investments, investors are responsible for the maintenance and upkeep. So, risk level is very important, but one of the other things that determines the property type is going to be the age of the investor, okay? And I think I had somewhere where I went over that. Okay, so risk level has to do with age. Older investors tend to look for properties that give steady returns with few or no management responsibilities, which would be like triple net, absolute net. Younger commercial real estate investors, on the other hand, often prefer investments with higher returns, which necessarily means properties that are also higher risk, and that volatile returns means profits can easily go down as they go up. Both older and younger commercial real estate investors need to consider how much of their money they are willing to tie up in a property and whether they are willing to use leverage to finance additional purchases. Whether they choose to go with a mortgage or approach private lenders, your ability to use the other people's money to finance good deals greatly affects your ability to scale your investments. Okay, the when is, like right now, if somebody asked you if this is a good market to buy, what would you tell them?
I'd say it depends on what type of investment they're looking for.
Okay.
Depends on the time frame, how long they plan on owning.
Yeah.
I guess it depends what type of loan they're looking at, who the lender is too.
Okay, we'll get back to that one. Okay, where is the location important in all commercial real estate?
Yes. Except for storage warehouses in the middle of nowhere. But even then, it's low price, low cost.
Okay, and the why is more the time frame and their criteria. Okay. Okay, so let's say you have someone who owns a dry cleaners. What's the best type of investment property to recommend for them?
Probably neighborhood strip. Triple net neighborhood strip center.
What?
It's fairly easy to maintain, simple investment, compared to something larger.
Right, okay, so you got somebody that rents in one of these little strip centers.
Right.
So you pitch them on, you buy and use, and then you can manage your own property because you're here.
Mm-hmm.
So that's kind of, a good way to go, where you can look over your own properties, but you also can be an owner user,
Yep.
that kind of thing, okay? Lawyer, doctor, office, same thing, okay? They need why should they pay rent? They could actually, rent small space in in an office building and then make money off the rest of it.
Especially if they go in on SBA.
Right.
Don't have to put much down.
Mm-hmm. Exactly. Okay, so where should someone interested in investing in commercial property start? What are the 3 most important people in their commercial real estate investing strategy and ongoing? What's the 3 most important people to the investor.
Say they're a peak commercial agent. They're, I guess,
Lender.
lender. Thank you. And
Tax guy.
yeah, I guess accountant, CPA, probably.
Lender is like a plumber and electrician, okay? They're a vendor. They're important, but they come and go based on the rates.
Mm.
The three most important and the ones that got to be involved in every single one is us, their agent, their real estate attorney, not their personal injury attorney, a real estate attorney, and a CPA with real estate experience. The attorney will set up the LLCs, the CPA will look at all their tax things with 1031s and all that kind of stuff, and you're the ones that are going to find the best property and give them their advice. So those are the three that are always around. You might not need a lender if they do cash. You might compare 3 or 4 different lenders. Your lender does a bad job, you get a better one the next time. So, and plus they might have a 30-year relationship with their bank that, you know, they're already set on that. So lender, of course, you need, but you also need structural engineer, an inspector, and all that to like help you with that. But that's all stuff that comes and goes. But those are the three most important. Okay. Start by consulting with a real estate practitioner to find out what investment opportunities exist in the market. Because the rate of return is higher than they get in tier 1 markets like Chicago or LA, there's been a lot of competition which is driving down the cap rate and creating higher barriers of entry. Some investors like high barrier of entry because there's less competition for that. So there's some REITs and some investors, they only want the best properties in the best location even though it's expensive. But they have money, so they like that. They don't want to be one of 50 people going after a Dollar General for $1 million. Okay. How long until investors realize a return?
Depends on the investment.
What would you say if they just asked you what would be an average?
I mean, are we talking
Could be the first
to
one.
recoup your down payment, or you mean actually turn that first dollar?
5 years?
3 to 5 years would be a good one, but you know, depends how much they put down, what's the
Yeah.
cash flow. Investors can make a return that first year as long as they invest intelligently. But how long an investment is profitable depends on market conditions. There's a limited product and lots of investors chasing deals. Acquisition prices are high compared to recession prices. So if someone asked, is now a good time to buy? It depends. But we want to sell them something no matter what it is. And we don't know if prices are going to go up or down, but you kind of just protect yourself because you do always want to show both sides and that you are not trying to be greedy and trying to get one transaction, but that you want to do multiple deals with them. So you tell them, look, there's probably going to be a dip. It's not going to be nearly as bad as last time because there's not a lot of bad mortgages out there, but there might be a dip. But the dip might not affect all asset classes. Because if there's a dip in residential homes, that actually makes more people go into apartments, which makes apartments more desirable and more valuable. Okay? Industrial and commercial, I mean, industrial seems to be pretty stable even during most recessions because most of those companies have the ability to withstand it. Retail takes a dip sometimes, but it depends. If you have a grocery store center, people still got to buy food, so it just depends. So you just got to weigh out all their options and let them know the good and the bad. But if their thing is flipping houses, then you tell them, yeah, when a recession hits and the houses are cheaper, we'll be able to get you inventory a lot cheaper, okay? Because there's gonna, you know, so yeah, you got somebody that flips houses. The thing is to store up your money now and have it, and when recession hits a little bit, they'll be able to just pick up houses for a lot cheaper than they are right now. So
To piggyback on that, once the prices do fall, if they fall, loan rates will probably go up. So you
it
kind of
almost
net out in the
could,
end.
yeah. But if they have enough down, or you know,
Oh.
it'll outweigh it.
Yeah.
But still, it's like yes, it's you got to give them all those facts. Okay. So I kind of talked about this, but who should they work with? First, they talk to agent, broker, attorney, and a CPA. They're also going to work with roofers, structural engineers, plumbers, lenders, electricians to ensure that the property is structurally sound. But there's also the environmental things. There could be you would be the one to coordinate a lot of those things for them, just like a residential agent would. But you got to make sure that, because you don't want them asking you about legal advice, because then that's a nightmare later. You don't want to start giving them tax advice, so yeah. All right, so some of the other things that you need to make sure that you pay attention to lease dates and stay ahead of any renewal options, because it's easier to renew than it is to find new tenants. Many real estate practitioners watch lease expiration dates and will poach tenants when owners aren't paying attention. Okay? So it's like you got this great tenant in there, but if they get stolen away by another building and then you have a vacant building, then you got trouble. But you got to think ahead on that. It's like, is this going to be easy to re-tenant or not? Okay? Some so desirable they'll have a bunch of people fighting for it. Others it'd be a nightmare and it's going to sit empty for a long time. And does your investor, can they afford, are they making enough money to be able to afford to have it vacant for 6 months, okay, or a year?
Simi Valley.
Okay, talked about risk levels. You got to make sure that they understand the local market conditions, okay? Nationwide, corporate-backed net lease properties, the local market is important, of course, because you got to have a certain amount of demographics for income, good or bad. You got a Dollar General, you don't want it to be in a rich area, you don't want it to be the opposite. So you got to have the right demographics for what you're putting there. But for net lease, a nationwide type product, local market conditions are sometimes not as important as a neighborhood center, or definitely like a multifamily. Okay, so make sure that understanding the local market conditions are critical on the vetting, and a lot of that is through our research, CoStar, LoopNet, like looking up, finding the right comps and finding out, what's the traffic patterns, and is that Walmart that's there, is that going to close anytime soon? Because we've had that happen where a Walmart, like right beside one of our buildings, closed right during escrow, and it's like our client wanted out of that deal because that's like the biggest draw around there. Okay. Okay, so due diligence is another thing that you're going to do with your client. But one of the most important things for investors and for you to convince our investors is don't shy away from the math. The math is one of the most important things, and you sometimes have to explain that because some clients, math is not their thing. Okay, I mean, if you're a lawyer, you can get through law school without much math. Okay, they're very analytical, but math might not be their thing. If you're dealing with an engineer, yeah, they'll know the math better than you. Okay. Getting comfortable with math and various formulas is a must if you plan on investing in commercial real estate. Fortunately, there are plenty of online calculators that do the work for you. Make sure the numbers you get from the seller are real numbers, not projections, which is another reason CPA. You get the books, you take the word that these are real, bring them to a CPA, and the CPA will say, well, you know what? Let's get them to sign so that we can get these same things verified through the IRS. Because their books are not the same as if you get it verification. I mean, and some bank statements that they use whiteout and whatever is not the same as getting them directly from the bank or getting stuff directly from the IRS. Make sure that they are real numbers, not projections. And the profit is depending on getting the numbers right, and an accurate pro forma is critical for any of your investments. Don't borrow more than you can handle, which that's what a lot of new investors get hurt on. Hopeful commercial real estate investors over leveraging a property by borrowing too much has ended more than a few investment careers. Aside from the fact that it's highly unlikely an experienced lender will grant you 100% financing, it still would be a good idea in light of what's called the break-even ratio. the break-even ratio to a lot of people is more important than cap rate, anything. The cap. So let's go over that a little bit. The break-even ratio is called the default ratio, is a formula used by lenders to determine whether or not they should lend you money for a property. It measures the proportion between income and outgoing cash flow so that lenders can determine how much of a property's rental income can be lost before the break-even point. So the break-even is operating expenses plus debt service equals the gross operating income. If lenders look for a break-even ratio of 85% or less, which means that rents can go down as much as 15% and the property will still break even. Okay? Now, if your client has a bunch of savings or very high income, other words, then that doesn't apply as much because then they know that he still has money if it did go below the break-even on the property. But if they don't have that, then they're relying just on the property. Who would be the only type of lender that would go 85, 90, 100% of a loan value of a property?
Like a huge institutional lender, but they would only lend to someone who's very qualified, I'm guessing.
Experienced investor.
Yeah.
Either a REIT and it's a trophy property with like corporate backed, like something like that, or hard money lender, very high interest, but it's a good property and they don't mind lending on it because if they got to take the property back, they're cool.
They can still,
Yeah. Okay.
So that or SBA too, if you can do it.
Yeah.
80%.
Yeah. Okay, so the best property for new commercial real estate investor, there's no specific type that works for every investor, but there are some that are better for certain type of investors. Like, who would be the best to have a storage facility?
You mean I guess some
Like,
of the ones
what
that are
is
really
like? What are
hands-off.
some of the benefits of a self-storage?
Very
Who would-
hands off?
Right.
Low maintenance,
Yeah.
passive.
Right.
Not a lot
So
of
maybe
risk.
an older investor that wants something safe,
Long term.
but also passive that they don't have to put a bunch of time and effort into. It's almost like the net lease, but maybe even more secure because it's like you have 200 individual units.
Mhm.
They usually nationwide they're above like 90% full and they just pay every month, and then if they don't pay you auction the stuff. So it's almost like safe. You sometimes have a part-time or a manager there that doesn't make much, but it's secure, it's fenced. I mean, they're easy.
Mhm.
Net lease is good, but you still could end up with an empty property. Okay. So net lease is good, but it also depends on the quality of the restaurant and the backing, how good the franchise is, that kind of thing. Who would be the best investor for multifamily?
Preferably someone with experience in multifamily who knows that, the ins and outs.
An active investor, someone who has multiple investment properties and knows how to use a property management.
Okay, what you guys are describing are for smaller buildings and probably B and C buildings.
Okay.
Okay? For A buildings and trophy properties, that's more like professional investor and REITs, but they're not going to manage it themselves most times. They're going to hire third-party management to do it because then they're barely, basically all they do is just look at numbers and go visit the property once a year with the asset manager, decide when they want to sell. Okay, so that's kind of who is in multifamily. It's either one extreme or the other. And usually the smaller operators, they're usually like operating their own and it's their own employees. What's the number of units you have to have a resident on-site manager in California?
16.
Okay. How much time do we have?
You got 6.
I knew that question was coming.
Practicing all morning.
Okay, good. All right, so who is the best type of owner for an office property?
Usually an owner user,
Mhm.
typically.
Yes. Okay. Yeah, we talked about earlier, like if you had a lawyer, it would be good to get them in an office because they could have their law office there and then oversee the building from the same property that they're using as an owner. Same thing, we talked about best for retail is somebody that has a retail type business. They own a little, they own a Jersey Mike's, they own a dry cleaners, they own some kind of retail business where if their first investment is a little strip center, maybe even the same one they own, because that is one of the best ways to sell one of those properties is to get the tenant that's already there. Like, you get a lot of automotive use where the investor wants to sell their automotive or their body shop, and so the first person to buy is the person that's been renting there for the last 20 years.
Yep.
And it's easy for them to get a small business loan if they've been there that long, because they got the financials, they have goodwill. What's goodwill?
So that's the people are going to return to the business no matter who the owner is. That's the
When
business.
you have a business opportunity sale, sometimes you own the land, sometimes you just have a long-term lease. But besides the inventory of the business, one of the big things that equates to value is the goodwill. Like how much is built-in repeat business because they've been around so long and they do such good, So, but the bad thing is that sometimes that goodwill is tied to the owners on how they run thing, and as soon as you get new owners that don't do the same thing, but if it's just an absentee owner and the whole staff and management stays, then usually it will continue. So I mean, you got to look at, does this little restaurant you're buying have 200 5-star Yelp reviews? That's worth a lot of money. Okay. All right. Anybody have any other questions? Okay. Thanks for coming, guys. And we got the event this afternoon, so stick around. You guys can get some free food.